Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guest today is Joseph Jacks of OSS Capital. Hello, Joseph. How are you doing, dude?
Hey, Mark. I'm doing good. How are you?
I'm doing pretty good. So you're a VC, for those people who don't know, and you have committed to investing $25 million into the Bittensor ecosystem. So that's how we sort of, I got to know, you came on my radar basically because of that. So tell us a little bit about, in your own words, in your mind, what is Bittensor? Why are you so interested in it? Why have you committed $25 million to the ecosystem?
I learned about Bittensor a year ago, and I've been pretty transparent tweeting about this. But I'll kind of share the story. So, as with many things, I learned about the project over Twitter, over X, actually.
Yeah.
And maybe inadvertently went down a little rabbit hole. Probably February timeframe, and then I started.
Wait, February of this year.
February of 2023.
Okay, so it's been it was like a year ago. Okay, yep.
Correct. Yeah. Yes. 2023, February 2023, and I initially didn't quite take the project as seriously as I should have, mostly because I think at the time, and this actually still might be fairly true. I mean, the project is in I think relative infancy, even today. But at the time, there was very little really accessible information about the architecture and the consensus algorithm and what the network was all about. And, it's a blockchain, but, okay, how does that differ from Ethereum or from Bitcoin? And, what is this blockchain incentivizing in particular? And for full disclosure for everybody listening, I am not what you would maybe characterize or call a crypto bro or a Web3, person, right? Like I'm, as you mentioned, a VC investor, but I focus on more traditional software companies, like software businesses that are selling an API or selling a cloud service or a SaaS application of some kind. And I actually focused on a particular type of technology company and startups that are based on open source projects at the core. So open core commercial open source companies. I'm pretty well known for that.
So OSS stands for open source something, basically?
Yeah, OSS Capital. The OSS in OSS Capital stands for open source software. And it's kind of a weird name for a fund, but at this point, I think we have somewhat of a brand and people know about the fund. And so I don't think we're going to change the name at this point, but yeah, it's OSS for open source software. I'm pretty obsessed with open source. I have been for the better part of 15 years professionally. And I was very lucky and fortunate to start a couple of open source companies myself. I started the first Kubernetes company in 2014. And the conference around Kubernetes called KubeCon, and I was very fortunate to participate and contribute to that project fairly early on. But going back to Bittensor, I learned about the project over Twitter, got to know the founders, reached out, learned about what the general sort of philosophy was and the architecture, but I didn't really have enough conviction or sort of belief at a technical level to make a really significant investment from our funds. And by the way, for more transparency for people, I don't quite talk about this too much, but I think I've tweeted it out once or twice. OSS Capital manages a series of funds. They're all very small. They're all about $50 million each. We currently have 4 of those funds set up. The first 3 are either fully invested or heavily deployed, and we just opened up our 4th fund. So overall, like committed capital, OSS at the end of the year, we're still like launching our 4th fund. But I can't share more details about that. I don't want to violate SEC regulations.
Right.
But manage a couple $100 million, and then across each fund has about 25, 30 investments. And we're not really known as crypto, like Web3 investors, right? So like we don't.
I'd never heard of you before Bittensor, right? Like you weren't on my radar like at all. I was like, who is this?
Yeah, we are actually very well known in the sort of, you could say, Web 2 VC world, specifically for open source companies, like open source software companies, open source startups. And we have been for a few years now, because that's kind of how the fund has been branded. But we've only made like 3 crypto Web3 like investments in the history of the fund. The first one is Parallel, which is in our first fund, and that's the company behind Parallel trading card game and the sci-fi gaming franchise. And they have a bunch of NFTs and hugely popular Ethereum-based gaming company, basically gaming studio. The second one is Research Hub that we announced last year, which is Brian Armstrong is the CEO. He actually listed that in the Coinbase S1. He's the CEO of 2 companies, Coinbase and this company.
Oh, interesting! I didn't know he was a CEO, a CEO of 2 companies, kind of Elon style, right? Like that's news to me.
This is one of his very minor roles, but he spends impressively he spends like probably between half a day and a day a week on this company. And so, anyways, that's they have a token, and it's kind of hybrid Web 2, Web 3, but we were fortunate to lead the seed round. He was kind of self-funding it for a few years, and it's been a pleasure working with Brian on that. Then the third ever investment the fund has ever made in crypto, in the sort of crypto universe, is Bittensor. And so we sort of developed conviction, I guess you would say, like over the course of about a year. And I feel in reflection, this is a super trite thing to say, but obviously big mistake not going in with the conviction that we have now a year ago, right? Because prices were far less exuberant a year ago than they are today. But I can talk about our investment thesis and our views on the project, but we announced, I believe about a month and a half ago, that OSS Capital is committing $25 million. And so that's like spread across all of our funds sort of evenly. And we're also investing in developer activity and ecosystem companies building tools and building bridges and more sort of infrastructure around Bittensor to make it more accessible for the broader developer ecosystem, as well as the sort of you could say the sort of DeFi-esque community that might be taking shape around Bittensor,
like TauFi kinds of things, as I said.
Yeah, I think there's going to be a lot of ways in which you can get exposure and create instruments around the asset that could produce interesting startups that we might consider investing in. So far, we haven't made any investments just yet, but and we're also interested in supporting people who might want to create subnets and participate in these, decentralized competitions for producing better AI models, and also basically allocating our holdings directly to people doing validation of intelligence, basically on the network. Lastly, I would say we're allocating a small but not insignificant chunk of that capital for purely creating incentives for developer activity around documentation and core development, which somewhat intersects with what the foundation of Bittensor is sort of designed to do. And so OpenTensor has a mandate to invest heavily in driving developer activity and contributions to the upstream open source project, which is all about improving the quality of the protocol and working through the engineering roadmap and things of that nature. We care a lot about that as well, and so I would say something like 5 to 10% of our investment is sort of earmarked for that as well.
Now, when you say you've invested in Bittensor itself, have you invested in the Tau token, or did you invest equity into some company structure that supports Bittensor, or is it both?
Yeah, so there is no company structure that supports Bittensor today because the blockchain token itself was basically a fair launch, no pre-mine based launch. And so we have basically done, I can't talk about the specifics too much, but we've done a series of OTC accumulation transactions over the course of the last few months. And so that's where the kind of the bulk of the capital is getting allocated, and we're liquid holders for very long time frames of Tau, basically.
Yeah. So with this $25 million that you are looking to invest in the ecosystem, you talked a little bit about, what I call TauFi. And in my mind, it's like, bridges between the Tau blockchain and Ethereum or whatever, as well as things like WrapTau, supporting WrapTau on Ethereum, or maybe Tau-based lending or Tau-backed stablecoins or whatever. And that is all very important. Are you, and you did mention that you were also looking to invest in people who are creating subnets. Is there some sort of allocation for each of those projects, or are you just being opportunistic about what you're looking for? And what specifically are you looking for? Would you give me some examples of some projects? I guess you can't talk, so you haven't made any investments yet, but sort of give me what's sort of the ideal thing that you're looking to invest in so far as you've defined it so far?
Yeah. So one thing that I can say is the vast majority of that is already committed to Tau itself. That we're just holding for a very long time. That we don't intend to sell for the foreseeable future. At a minimum, a decade, let's say. On the other side of things, like let's say 20-ish% that has not been committed, we have a sort of plan to kind of look at opportunistically on a case-by-case basis which subnets we feel could generate really significant reward emissions earnings, and specifically the teams behind those subnet ideas. And so for the folks that are just watching this, that I know you're very familiar with this, Mark, but maybe we can kind of talk about what is a subnet.
Yeah, please go ahead.
What is it about, and this sort of thing. Very fortunately, I just ended an hour-long conversation with one of my LPs, one of my investors, explaining all of this.
So it's fresh in your mind, yeah. Please tell us what are subnets, and let's talk about specifically what some of them are doing.
Sure.
I think that makes the project tangible, right? For
absolutely. So this is one of the big, very important things that we need to make accessible and dumb down for people who are not Tau-pilled, if you will, people who do not understand Bittensor at a technical level or at an architectural level. And so I'm just going to share who it was that I was speaking with, because I think it's actually pretty cool, and he's an incredible human being. Is the founder of Redhat, Mr. Bob Young.
Wow!
Bob was the founder and CEO of Redhat from inception in 1993 through to their very successful multi-billion-dollar IPO in I believe 99 or 2000, $3 billion IPO, and then ultimately passed the reins over to a couple of CEOs who replaced him after he became chairman and went into sort of semi-retirement, and then IBM acquired Redhat for $30 billion in 2018. And so really great company. We're very honored and privileged to have Bob as an investor in our fund, but he is an intellectually curious person, and he's been seeing me tweet a lot about Bittensor, and obviously I'm allocating some of his capital into Bittensor as his GP investor. One of the folks he's invested some of his money in. And so we were talking about Bittensor's design, the architecture, what is a subnet, and so on. Bob is brilliant. He actually understands Ethereum, and he's been very aware of a lot of the sort of the crypto project evolutions over the years. And so I use the analogy of layer twos in Ethereum to explain what subnets were in Bittensor. And so around 6 months ago, maybe a little bit more, correct me if I'm wrong, Mark, August, September timeframe, Bittensor launched this idea of a subnet, which is basically a domain-specific incentive algorithm that you implement and run on the network for the purpose of earning a reward against the overall supply emissions over the sort of the halving schedules on the blockchain itself. And so the closest thing that I can kind of use as a rough example for that would be Ethereum. Ethereum has layer twos. You can sort of like do roll-ups, and you have a sort of separate chain for different types of purposes, different applications. On Bittensor, the way you do that is you create a subnet. And so today,
the way I would explain it, sorry, I just want to interrupt real quick because I think I can clarify a little bit. So the way I think of the subnets are, there's a subnet owner, and the subnet owner is like setting up the contest. Like my contest is I want somebody to make AI that basically does what Midjourney does, and given a prompt, it makes an awesome picture of some sort, right?
Yes.
So now people can enter that contest. These are the miners, right? The contestants. And then there's the validators, which are like the judges of the contest, who are like, oh, this one here is doing the best. And that's how the rewards are allocated. And the validators get a little bit of candy as well for being judges in the contest. Yes.
Correct. Yeah. And so that analogy of layer twos on Ethereum breaks down quickly because it's a very different architecture. What Bittensor does is it runs these continuous contests, competitions for producing what's called machine intelligence or intelligence and AI models. And those models can comprise of a variety of things. You could have an image generation model, an LLM. You could have a video generation model, a code gen model. You could have something that is a critical component of either the production of neural networks or the inferencing of them. And so one of those critical components is fine tuning. And so one of our companies actually in the OSS Capital portfolio currently runs the subnet doing fine tuning, which is the first subnet to actually interact and integrate with other subnets. So basically taking the output of the fine tunes and working as a sort of cross subnet, almost like a meta subnet, if you will. And so Noose Research was one of the companies that we led the founding seed round in late last year. They announced that in December. We actually introduced them to the Bittensor team, and they launched the fine-tuning subnet. I'm blanking on which subnet it is. I think it's subnet 6. Could be 6 or 8. I can't remember exactly off the top of my head.
Yeah, there's 32 for those who don't know, right? So
there's right now, subnets. Right now there's 32. That's kind of a hard-coded thing to sort of bootstrap the initial activity on the subnets. I'm very curious what your take is on this, Mark, because I haven't had these conversations with too many people. But my conceptualization today of the hard coding 32 is really just to sort of say, let's see the initial crop of innovation and kind of activity from people that are going to want to run these competitions for better and better AI models or services on Bittensor. And over time, as we see more demand and more interest from the AI community for producing more competitions effectively that are maybe more finely scoped as opposed to more broadly scoped. So today you have subnets that do a lot of things. In the future, each subnet will only do a very, very specific thing. And so it'll get to be more fine grained. We'll have 64 and 128, whether it follows this similar sort of multiple factor. I think in the future, there's going to be thousands of subnet, maybe tens of thousands. What's your perspective on that? I'm actually kind of curious.
Yeah, I like the idea of limiting it to 32 for now, even though it's sort of, I don't know, it feels hard coded. It feels sort of mainframey, right?
Yeah.
It's not like anyone can do anything, but if anyone can do anything, then everyone's spread out everywhere. And the chances of the kindling catching fire in one place is greatly lessened if you have it too greatly distributed amongst multiple things. So I think sort of penning it in and forcing everyone down these narrow channels, at least in the early days, increases the chance of the project succeeding widely. right? It's like a crossing the chasm thing, right?
Yes.
That strategy of just, let's go after this and
Yeah.
only this. So
Yes.
it's 32 this is, but better than 128, right? So
Yeah,
I like it.
I think that's right. That makes a lot of sense. Thanks for sharing that. I think we're on the same page. I mean, one thing I tweeted earlier today actually was I think that the business model for open source AI is Bittensor, and so I'd like to just kind of expand on that by further explaining why these subnets are interesting, why these like sort of domain specific competitions are interesting on Bittensor. And so as an AI founder, startup, creator, capitalist, you sort of have two choices. On one hand, you can raise venture capital from people like me or Sequoia or Mark Andreessen at Andreessen Horowitz and a bunch of other people, buy a bunch of GPUs, and then launch a paid API service, charge people for some fair margin differential of what your raw costs are, because you have to make money. If you're not, you're just acquiring users, which you could also do, and run a loss leader service or sort of like a loss at a heavy loss service to just acquire users, which plenty of companies do. I'm pretty sure that's what OpenAI does. And then figure out how to make it up on volume. Pretty standard.
Like the Uber model, right? Where you eventually hope to be profitable.
I would say most AI startups are doing this, with the save few exception of Midjourney and a handful of others. Or you have an interesting business model called Bittensor. And so what is Bittensor? It's a super interesting decentralized reward mechanism that pays you based on the emission schedule of the token on the network for producing better and better AI objectively. Now, the way the algorithms currently work is not perfect. There's a lot of flaws. There's a lot of things that need to get ironed out. The way validators actually, as you said, judge, which is the right metaphor, whether the quality of the outputs are there. There's a lot of flaws and a lot of challenges with that without going into the technical details. But let's just say that the current emission schedule, which is a fact today, is 7,200 tau, which in the current prices of tau is $5 million US equivalent per day in emissions.
So it's per day, yep.
Per day.
So it's like Bitcoin, right? Where Bitcoin emits X number of coins per day. Same
but
thing.
It's important for people to understand that this is $5 million a day, which is a huge amount of money on a monthly basis and on a yearly basis, actually closely approximating the revenue of OpenAI. And so not far off. I mean, OpenAI might be 15, 20% higher than that. But as the price of tau inflates based on the scarcity of the token increasing following the halving schedules, you'll see the price pressure go. You're going to see the price pressure go up. You're going to see many reasons driving the price: speculation, AI narrative, and fundamental to
staking. I mean, because in this universe, right, unlike Bitcoin, in this universe, in the tau universe, you have to stake tau. That is, put it in a safety deposit box, if you will, in order to run a validator on the network, in order to propose a subnet, in order to like do anything in the network, you have to have tau locked up.
Correct.
And on top of that, little users, like me, who aren't doing a subnet or aren't a validator, can take their tau and stake it with one of those entities, sort of, investing in them, if you will, temporarily.
Absolutely.
And then take a piece of, and then basically we earn more tau. So imagine if in the Bitcoin universe, you could take some of your Bitcoin that's in your ledger and stake it with a Bitcoin miner and earn a little bit of whatever they make, right? Earn like, 0.0005% of whatever they mine, right? That's sort of the analogy.
Yes. And I think there are even greater technical and utilitarian reasons for why Bittensor's native token as an asset class and as a reward capitalist reward mechanism will actually over time be far more compelling for the most talented AI researchers to spend their very valuable finite time producing intelligence for, which is it's permissionless, it is meritocratically rewarded, and it is something that itself can provably have far more long-term value than holding a conventional fiat asset or holding an equity instrument in a startup that is backed by, frankly, fastly disappearing margins of, if you understand P&Ls and business, EBITDA differentials because of two factors: the cost of compute plummeting, and two, the commoditization of larger models through things like Mistral and Llama. And so I would say if you understand those two factors, you will very quickly realize, if you think from first principles as an AI researcher, which not everyone thinks from first principles, it's kind of hard to do that even if you're a really brilliant AI researcher, that the optimal reward mechanism for machine intelligence over time is on a blockchain, not owned by one single company, but driven by a collective of people, all marching toward the same kind of philosophy, which is that AI should be governed and controlled in a decentralized manner, for humanity by humanity, and not controlled or censored or lobotomized by a select highly politicized private corporations,
as Google has found out recently, like the last,
as we've seen with Google and OpenAI and many others. And by the way, I am a VC who invests in those companies, and so I am doing both things. So I may sound a little bit hypocritical in saying these things, but it is very important to kind of understand the fundamental design of Bittensor exactly mirrors the philosophy and value proposition of Bitcoin vis-a-vis fiat currencies, where you have Keynesian economics and this entire narrative of money printing having all of its flaws. I was tweeting earlier, this is one of the really deeply flawed things about the US dollar is there's 12 people at the FOMC that vote every 6 weeks on how to tune the knobs and pull the levers of a $40 trillion asset. And this is done manually, by hand, based on not just stale, but often wrong data that is far from real time. Okay, so the data is not even remotely real time. We're not talking about like these great dashboards from Minority Report. These people are operating on data that you could think of as an equivalent of coming off of a fax machine, handed to them by some butler walking down a long hallway. Gilded chairs, waiting to then make assessments in a sort of boardroom consensus delayed discussion, which is why we see these huge whipsaw effects of reflexivity in the economy every time interest rates are adjusted based on extremely stale and late data, which actually causes a lot of incredibly asymmetric market volatility. And pricing in or pricing out of assets far away from reality, right? And so
it just seems insane. Like if you've played around with DeFi, right? We know in real time exactly what the lending, state and health of Aave is, right? Like we know exactly what's going on in real time. We can make decisions in real time, and we can make more than one in an hour. Let alone every 12 weeks or whatever, the Council of 12 meets, right? So just the time frames and the real timeness and the precision of the information in DeFi versus or blockchains versus, the way things have been done for hundreds of years. It's absurd. It's like the difference between a horse and a car, right? Like it really is, like it's more than that difference.
Yes.
So I'm totally feeling what you're saying.
Yeah. So I think Bittensor over time will be larger, more economically impactful, vastly more valuable than all of the proprietary closed AI corporations combined, which includes OpenAI.
That is wild. That is a crazy state. I mean, I love it. I think you're right, but it sounds crazy, right? But I think it's accurate from first principles. If you think about the design of the system, the only risks that get in the way of that are catastrophic engineering execution missteps that do not continuously solve for the sort of obvious permutations and flaws and bugs in the system that pretty obviously need to get ironed out over an engineering roadmap, which I think are extremely
apparent to pretty much everyone working closely in the project. And it's very easy, low-hanging fruit to solve for things like, mitigating weight copying and people gaming the system and earning tons of tau without doing any real valuable intelligence production. Coming up with ways where the cost of entry is not prohibitive, where you don't have to spend thousands of tau to register a subnet. Like, that's a bug, by the way.
I agree.
That is a bug. And so, I would say Bittensor has the potential to be worth on the same order of magnitude or multiples of Bitcoin itself, if the network evolves in the right direction. And that's kind of the thesis that we have, which is why we are buyers in size over the secondary markets. So to put out that advertisement to anyone watching this show, and secondary markets, aka OTC trades, and as well as wanting to really heavily invest in the ecosystem and get, frankly, the highest quality engineers who are enlightened and open to all the fundamentals that I just articulated to jump into this community and start contributing. I'm encouraging all of our companies to do that, including companies like Liquid AI and Noose Research, Draw Things, Traceal in Canada, Stability AI as well. I've been talking with Emad quite a lot about Bittensor, and many others. And so I think that that's just kind of where we're coming from with the project, and obviously pretty bullish about it.
Yeah. So just repeating what you said and sort of encapsulating it, your thesis is that, just like with Bitcoin in 2010, maybe even 2011, if you had just simply invested in Bitcoin and not Uber or whatever, right, you would have made a lot more money. It would have been orders of magnitude larger ROI, right? And so a Bitcoin-ish emissions-centric business model is better and more profitable in the long run than sort of the old way of doing things that OpenAI and other centralized entities are doing them, not only because you make more money, but also because you get a better product. You get a stronger product because it's decentralized and it's not censored. And there's a lot more people, there's a lot more efficiencies of scale being applied. You get the big world effect of why the internet worked, whereas CompuServe and AOL died, right? Because they were too centralized and crunchy and old. You get this big world effect that you just cannot replicate in any other way. Correct?
I think that's right.
Okay.
I think it's actually better than the way the design of the internet played out, because people like Ted Nelson had brilliant ideas about how discoverability would have been better architecturally implemented through ideas like bidirectional linking, which plenty of note-taking tools have tried to implement at the level of information discovery between wikis and knowledge management systems. But the way the internet evolved is actually quite different from this big world metaphor that you sort of articulated there, which is that it ended up becoming more of like a cabal or a bazaar in the sort of theater and bazaar, a cathedral and bazaar sense of sort of Eric Raymond, where you have this kind of big Cambrian explosion of evolution that was more diffuse, as opposed to blockchains, where you actually have quite a lot of cohesion and connectivity between the network and the incentivization of outputs that indicate progress on that particular network. Whereas the internet certainly gives people that sort of democratized access to communication and data transfer, but it doesn't actually provide an inherent built-in incentivization scheme. And so I think that that's kind of an important thing to kind of point out. Having said that, there are two types of incentives that drive people. Intrinsic incentives, which are, I do it for the love of the thing. I want to play this particular instrument and I get happiness and joy out of it. Or I'm reading and I'm learning and that makes me, feel like I have a sense of purpose and I've acquired some knowledge. And then there's extrinsic incentives where you do something specifically to get paid in some measurable quantity of a thing. It could be a cookie, could be a US dollar, it could be something. And I think that in most sort of passion pursuits and pursuits of pleasure creativity, the intrinsic incentive usually dominates. There can still be an extrinsic incentive in there a little bit, some mix, but usually the intrinsic piece vastly dominates. In capitalistic entrepreneurial activities, the extrinsic incentive dominates. But I would say for the most profoundly impactful entrepreneurs, it's usually a very healthy mix of both intrinsically caring about making the world better and also, hey, I'm also doing this to make a monetary reward because I know that that's the best model to reinvest and help me sustain growing something that's hugely valuable. The way I see this best articulated is with Elon basically saying that all of his companies are philanthropic and they are a form of philanthropy. Fundamentally, etymologically, philanthropy is a love of humanity, a love of life.
Wow.
Right? And capitalism is a form of philanthropy. And so I actually personally don't like the idea of donations. That people ask me, like, with this fund, wow, you're so cool what you're doing, donating to open source and you're giving back. I don't donate to open source. I invest in for-profit capitalist endeavors that are in service of creating sustainability mechanisms through profits and generating businesses that are long-term sustainable to reinvest and grow the activity mechanism such that it is not dependent on handouts and donations from people.
I've seen so many like nonprofits get fat and like the salaries are like, people are making like $500K a year, at a foundation or a nonprofit or a charity. Yeah. And you just see how much of the budget gets gobbled up by that. And you're like, why? This is not like philanthropic. It's like socialism. Like it just doesn't work. Like, basically if the incentives are just misaligned and it breaks eventually because of that. Right. So,
but I think it's such a paradoxical, beautiful thing that blockchains in and of themselves are somewhat communist and socialist in that they're very
That's true.
But at the same time, they are inherently highly capitalist.
Yes.
And I think most of the incredibly beautiful and profound things in life have that sort of inherent paradoxical dynamic. Yeah. And it requires a lot of critical thought and it requires a lot of really intense first principles thinking, which is why, I still believe the vast majority of people who've made the biggest contributions and are benefiting the most in the crypto ecosystem are people who have the ability to sort of hold opposing ideas or opposing truths in their head and actually make progress that way. But I think we're going to need to sort of reduce the friction there and minimize the difficulty for mainstream people to really just appreciate that these systems are just simply a better way.
Yeah, blockchains redistribute wealth using capitalism. Right? Like it does what all the progressives want to do with socialism, but it does it with capitalism.
I think that there's a nuance there, though. I think that I'm not sure I would fully agree with redistributing wealth entirely, right? And so like there's this thing called the Pareto distribution, right? It's in biology, it's in capitalism, it's in markets, it's in monetary supply, it's in wealth transfer, it's in the richest people, and so on. And what the Pareto distribution shows is you're always going to have a sharp concentration on a certain part of the distribution and a gradual decline of that concentration, sort of like a J curve, but more of a sharp J curve, or the hockey stick kind of shoots up rapidly towards the needle or the sort of the more sharp slope. And I think that that's also true with blockchains. I think that pretty much every blockchain out there will have Pareto-like effects with the wallet holders. I think we will also see, as on Bittensor, there are hundreds or thousands of subnets, we will probably also see a Pareto-like distribution of emissions rewards going to maybe the top 10 or the top 20 subnets, as opposed to getting perfectly evenly distributed across all.
Sure.
But I think your point still stands. I think your point still stands in terms of there is a programmatic Pareto superior, let's say, way of allowing for very democratic access to the system that conventional architectures like private companies or non-blockchain based capitalist systems do not provide or cannot provide.
Yes. Makes sense to me. All right, so I want to go on to another topic now that I brought up in the previous Tao episodes. So I, love the incentive mechanisms and sort of the way it works for, the contest to reward AI construction excellence. What I don't see right now in the Tao ecosystem is something which rewards excellence for usage. So there is no product market fit reward structure, right?
Yep.
So it doesn't reward popular products. And that bothers me because the market rewards popular products, whereas Tao at this point does not. Does that bother you too? And is there some plan to fix it?
I think so. So this is a really great question. I think my way of phrasing that would be there's a supply side incentive mechanism and then a demand side incentive mechanism. Today, Bittensor really only implements a supply side incentive mechanism. In other words, the network rewards infrastructure emissions for AI researchers, developers, application engineers to develop services on Bittensor for particular domains or functions. Whereas in your words, which I think is accurate, Bittensor currently does not have any connectivity to rewarding the demand side of the usage of those services, which is to say, let's just use an example. I have an image generation subnet. I'm generating better and better, higher quality images in, let's say, a particular domain using stable diffusion. The network rewards the production of higher quality outputs. And so the subnet owner is getting rewarded in Tau. Everything's working great. There's a really great algorithm implemented at the subnet level, so people are clear on what the thresholds are for the quality of the outputs in order to be on the top of the leaderboard for that particular subnet. But in terms of the exposure of that model to an end user through an API or through a consumer application or through what have you on the demand side, Bittensor is not part of rewarding the distribution of that service to the end user, right? And so that part of the business model is completely out of the picture. Now, it's an interesting observation, and I would say a couple things. One, I'm not exactly certain if that is the scope of Bittensor. I think Bittensor could actually be as large as what I mentioned earlier, this sort of general purpose platform infrastructure for creating better machine intelligence without implementing an incentive mechanism reward for the demand side. Because you could say, I'm a subnet owner, I've created this really great service, and I'm getting tons of rewards in Tau, but then I just expose that to the world, and now the world can basically choose to pay me for it in whatever currency they want. It could be dollars, it could be ETH, it could be Bitcoin, and I get to set my own arbitrary price point and determine effectively my profit and loss, my P&L on that particular demand side of the equation. So there's the supply side of the equation and the demand side of the equation. The supply side of the equation is effectively, I'm spending my hard-earned time and compute building this really valuable AI model, and I'm getting paid by the network in Tau based on the emission schedule of, the rewards going to all the subnet owners. That may be enough to where the subnet owner can then turn around and say, in terms of taking those rewards, I could use it to fund a business that then builds its own API service and its own billing scheme. But it is an interesting question.
Because I think it rewards brilliant science projects, but not products. And there's a big difference between like what universities produce and what companies that have the market eating them alive if they don't produce something that's a great product with a great UI.
It's an interesting observation. I think it's an interesting observation. I'm not sure I would go that far. I think it can produce incredibly valuable models and services that rival what venture-funded startups are producing, or frankly, even what the open source community is producing, which is, as I was saying, what is the business model for open source AI? Is it really could be Bittensor. And so I'm not fully sure I agree with that assertion of it's like just science projects versus products. I do think that it's kind of incumbent on the Bittensor subnet owner, as they've sort of won the competition of creating a really great model, to say, now what do they do with that model? Do they turn around and offer up a consumer application running on an iPhone, or do they offer it running an API and a web service? There's a whole spectrum of things that are sort of not. So this is why I say it's an interesting observation. You could say not yet in scope on Bittensor's incentive mechanism to say, do we solve for rewarding on the supply side of the equation, and how do we actually do that? Because today that those primitives do not yet exist, or do we say that's out of scope? We're only going to focus on the demand side, which is you have these machine learning engineers. They have demand for getting compensation for producing their really great AI models or AI services. And what they're saying is, this is kind of how I describe it to founders that I work with. It's like, say you have two paths. Path A is you're going to raise venture capital. You're going to buy a bunch of GPUs, pay a bunch of really expensive AI researchers, produce something in a vacuum, run it on a cloud service, and then you're going to figure out the business model from there. Or you can go on Bittensor, just like Noose Research did, where they're generating $500,000 in profits per month. I know this because I'm actually, I'm not sure if they've allowed me to disclose this, but this is the first time I'm disclosing this here on the interview with you, Keith. But I'm actually buying the Tau from them, not all of it, but a portion of what they've earned, and they are getting $500,000 in cash on their books as a company.
Holy shit!
That's
okay,
pretty,
so wow,
that's pretty useful for them, because they could take that money and actually hire more engineers. They could actually recognize that as revenue, which is technically what they could do, because they're running a fine-tuning model on Bittensor. And what is that? $6 million a year in revenue. Last I checked, AI startups that are generating that much revenue are getting billion-dollar valuations. So, I think that that's kind of the decision that a founder needs to make in a very sort of both risk mitigated and architectural way, is how am I choosing to build my service as a capitalist? Do I build it in a way where I have to solve for, from scratch, the demand side incentive for building my service and the supply side incentive for building my service? Or, as of today, maybe not necessarily solve for the demand side, and I could just run on Bittensor and build on Bittensor. And then in terms of exposing my service to the end user customer, maybe that's the thing. That's the thing that I need to solve for. And that's kind of that's the heavy lift. That's the burden. And so there's an analogy that Amazon likes to use with customers that I think they use less so now, because Amazon is itself a heavy lift at this point for startups, because it's so complex. And there's quite a lot of margin there. So ironically, Jeff Bezos is your margin is my opportunities. AWS actually has a shitload of margin, as people know. But AWS used to be really all about undifferentiated heavy lifting removal, right? So they make it easy to run your service without you needing to stand up a data center and set up a networking switch and so on and so forth. What you could say about Bittensor for AI startups is it removes the undifferentiated heavy lift of getting compensated for building the raw infrastructure of your AI startup. And that is an enormous part of the equation and the cost basis that pretty much every AI startup founder faces when they go to the venture community to raise venture capital. Okay, so I would say it's like at least half of the heavy lift burden, both in terms of technical risk, capital, and access to, frankly, liquidity and compensation for putting in the upfront engineering effort for fine tuning or for model production and development and all the other things that you need to do. So I think Bittensor in its current state is actually a very powerful and compelling value proposition for pretty much every AI startup out there. But over time, as you pointed out, this is a really interesting observation. It's like, should Bittensor actually solve for also the end user business model side of things? I don't know. I don't have a strong enough opinion about that just yet.
Okay. Well, you've been traveling a lot over the last month or so. I know you're in Japan. I think you were in Taiwan. You've basically been running around the East from what I can tell. And so what are you doing over there? Is that Bittensor related or is that completely unrelated to this?
A little bit Bittensor related. Pretty much everyone I talk to in my job, I tell I talk about Bittensor. I'm very passionate about Bittensor.
Yeah, sure.
So I tell people about Bittensor pretty much everywhere I go. But no, we have some investors out there, and Liquid AI has already been making some press releases, so this is public information. But we have some pretty big partnerships with companies out there, and we're also very interested in developing hardware with a couple of our companies. And so I was in Taiwan for the last week, spending a bit of time at TSMC and working with some other partners out there. So generally, Asia is a really booming place. I also have about 12 companies in India, and I'm on the board of about 5 of them out there. And so I'm home now for about 4 days, but I'm going to India on Monday for a week.
Oh, wow. I've been to India a bunch of times, so I know what that's like.
I've only been a couple times in the distant past, but this is the first time I'm going for many years. And so mostly I'll just be in Hyderabad, but there's a couple companies out there that in the OSS portfolio that are very popular open source projects in India with millions of users, and really fortunate to be working with those founders. In general, though, like India, Japan, in particular, as well as South Korea, are actually really booming parts of the world right now. There's some currency issues with Japan, but in general, it's an incredibly fast-growing and vibrant country. The Nikkei, which is their sort of big stock market exchange, just hit the all-time highs, as well as like with many other exchanges around the world. But their economy there is really, really strong and booming, and they're investing a lot in chip development. Actually, the largest and most successful chip fab that TSMC launched in the last year is actually in the north of Japan, and just went online and is seeing a lot of success. So I would say that for a variety of reasons, I will be excited to be going out to Asia quite a lot in the near future and over the next several years, probably.
Cool. Okay, so I know that when you were thinking about your Bittensor investment thesis, you actually wrote it up. And I remember seeing it. I can't remember whether I should have seen it or not, but I know I saw it.
Yes.
And I don't remember a lot of it, unfortunately, because I wanted to go look at it. Can you just sort of summarize some of the high points of that?
Yeah, sure.
And also sort of focus a little bit on competition. Like I'm also a Bittensor investor, full disclosure, and staker. Like, how do we know that you and I aren't betting on the MySpace, right? That some fast forker or fast follower isn't gonna, like, we're doing the Friendster, and really the Facebook is over here.
Yes.
So talk about all that stuff, please.
Well, there's a project that I think a lot of people know about called Commune.
Yes.
I
know
know
him on the show
awesome.
a couple episodes ago.
That's really great. I know Sal, and he's a very talented guy. He was actually an early Bittensor developer, working at the foundation. I think there's going to be a lot of competitive systems, like in the same way that you see Cambrian explosions of competition in the world in many areas. I think competition is something that I'm a big fan of, and I think it drives progress and it maximizes the pace of innovation when you sort of embrace competition and you allow for competition to sort of like progress and accelerate. I think open source is the ultimate and highest form of competition. And I have a hard time, if you think from first principles, thinking of any other phenomena that is a more pure form of competition, including blockchains. By the way, I think just like the open source philosophy and design itself enables for that. And so all these blockchains happen to be open source projects, like first and foremost, like fundamentally, and then they sort of manifest as these decentralized networks of computers, and these incentive algorithms. But in general, they're open source projects. And so I think that there are going to be competitors to Bittensor. We're not investors in any, but we're we're definitely following and learning about the activity. And I think the project itself is best served to be open-minded, to learn from and pay attention to a lot of the other activity and development happening. I think Sal has actually a lot of really good ideas that Commune is implementing. And I think there's going to be a lot of cross-pollination and sort of idea sharing. I forget who came up with this. I think Bill Gurley is a big fan of this, but I like ideas having sex, of like, one idea sort of takes shape from another by sort of commingling concepts, and sort of there's a writer who actually coined that term, and there's a whole like book or manifesto written about it. But I think that concept is pretty widely discussed, and sort of like imitation is the best form of flattery, and that sort of thing. So yeah, I think there's going to be, if you think of Bittensor as Bitcoin, there's going to be an Ethereum for Bittensor, there's going to be Solana for Bittensor, there's going to be Cardano, like what have you, right? There's going to be
not Cardano, please.
I don't know. I like Haskell. I think
I'm just kidding.
I think
Charles, don't give me a call, Charles. I don't want to hear it.
I think functional programming is really cool, but languages are not a strong differentiator for a system unless you're operating in some super obscure niche. But yeah, in terms of the memo that we wrote, it has a lot of like very fund specific like financial stuff. So that's the reason why I couldn't share it publicly. But it has a lot of extensive comments on, sort of how we thought about access to this asset and liquidity, and how we think about holding timeframes and risks, and the history of the people behind the project, and all of that. And there was like maybe 15 or 20 sections of memo content that sort of wrote up in a kind of 20-page piece. And I'm actually still continuously working on adding things to it. I have not gotten around to doing this, but I hope to sanitize and make that readable for everyone. And so I could just publish a version and put it out on Twitter or put it on the internet. Hopefully, maybe it'll be useful for people.
That would be, honestly, it would be awesome, because that putting your kind of very meticulous mind from the point of view that you have on analyzing this investment and this product, I think would be extremely valuable. It would be extremely valuable to me. So I think a lot of other people feel the same way. And I think like you too, like what one of the reasons why I'm bullish on Bittensor is I've been in crypto since 2013, starting with Bitcoin. I was around for the Ethereum ICO and the big boom that followed after that, and then the crash, and then the big boom of DeFi, right? So there's sort of two waves of this very concentrated innovation and ecosystem activity, which we've seen it in Solana and a few other places, sort of, kind of, not nearly as much as we saw in Ethereum during these boom years. And I see the same sort of ecosystem activity and excitement in Bittensor, albeit in embryonic form right now. I think I'm seeing an Ethereum-like ecosystem in its very early days. That's what it feels like to me. So that's one of the reasons why I'm so excited about it. So
makes sense.
Okay. All right. So we're coming up on the hour mark here. What do you want to plug? Where can people find you on Twitter? All that stuff.
I tweet too much, probably, but I'm at JosephJax _ and yeah, pretty easy to find on the internet. Okay.
Well, Joseph, thank you so much for coming on and letting us benefit from your wisdom. Very, very enlightening. We'll have to have you on again. So that's it. My name is Mark Jeffrey. We'll see you all next time.